Hey guys, welcome back to Reserved Investments on YouTube, where we talk about killer stuff and tons of money. Now, today, we're going to talk about the steps that you should take before you invest in any type of antique and or collectible. Now, this is very important, guys, because over the last 7 days, I have been inundated with emails, messages, even comments in the comment section for some of my videos for people that have been seeing my videos premiere and or be recommended after watching finance videos on YouTube. So I'm not only affecting the antiques and collectibles side of the YouTube algorithm, now I have people that are interested in finance that are being exposed to my videos for the very first time. And some of these guys are reaching out and they're saying, hey, Sean, I want to buy an hour of your time. I know you're a consultant in the antiques and collectibles trade. Can we talk about investing in these markets? Now, again, I must state this as a disclaimer. I am against most people coming into the antiques and collectibles trade who do not have an emotional attachment to the items that they are buying for investment potential. Meaning, if you're just coming into this market and you just want to park capital for some reason and you don't care about comic books or rare coins or traditional antiques or Pikachus, Planeswalkers, Marios, Sonic the Hedgehogs, and the like, this probably, in my opinion, isn't the best use of your capital. Now, there are exceptions to that rule because there are a lot of people, guys, I hate to say this, that have no interest in the antiques and collectibles trade, but they make a lot of money by either manipulating these markets or they study them, much like you can study a stock or a bond or an ETF or a mutual fund, and they're able to eke out gains doing it. It's no different than what hedge funds do on Wall Street. So I really can't turn them away, even though overall, the influx of cash over the short term isn't always what's best for the antiques and collectibles trade going forward. We saw this in the 1980s, and I have done videos on this where I talked about the Merrill Lynch Athena Fund, all these high-profile investors coming into the antiques and collectibles trade, focusing on art, antiques, rare coins, and what it did to those markets and how it took decades for some of those markets to recover as a result. So in my opinion, this is probably going to surprise a lot of you guys out there because I consider myself a sophisticated investor, especially one when we talk about antiques and collectibles. But overall, I do not like a lot of the new money that is coming into these markets. Or if you look at some of these new ways to invest, whether we talk about fractional ownership of certain collectibles, where you can own one share of an Incredible Hulk 181 in CGC 9.8 condition, I consider some of these gimmicks, for lack of a better word, to be highly risky to the antiques and collectibles trade by and large. And again, I know that commentary is very controversial. That probably surprises a lot of you out there because pretty much I've been investing in these markets my whole entire life, since the age of 12. And that's been literally for more than 30 years. So I'm going to do a video, which is going to be this video, where I'm going to talk about the steps that you should take before investing in any type of antique and collectible. And I'm hoping that a lot of people at least watch this video and at least take a step back and analyze what they're doing before they start throwing money at these markets that they may not fully understand, or these markets where they may not understand the full risks. So the first step, if you're looking at the antiques and collectibles trade and you want to come in as an investor, you must determine the size of your budget. Now, this is paramount, and a lot of people don't do this, and they get caught with their pants down, pun intended, in a lot of these markets. If you're going to invest in rare coins, if you're going to invest in fine art, if you're going to invest in first edition collectible books, you must understand that you're going into one of the most sophisticated markets in the antiques and collectibles trade. In order to invest in those markets efficiently, you're going to spend anywhere from $3,000 on up if you're going after rare coins. If you're going after first edition collectible books, you're going to be paying $5,000 to $10,000 on up for any book in any type of collectible condition that is considered a true classic. If you're going after art, you're going to probably be paying anywhere from $10,000 to $50,000 for each painting or piece of artwork that you're going after. Now, on the other end of the spectrum, if you want to start collecting or investing in Pokemon cards or Magic the Gathering cards or video games, which I would not recommend, but people are trying to do it, to each their own, or even comic books or toys and action figures, which again, you guys know how I feel about that market overall. The barrier to entry is a lot lower than that of a sophisticated market in the antiques and collectibles trade. So you got to know your budget, and you also have to know yourself to know what market you want to try to get involved in. Now, I will give you another secret here. If you do invest in Pokemon, Magic the Gathering, even to a lesser extent, certain video games, other pop culture artifacts, those markets are more volatile. So those markets are more like a roller coaster ride, where if you come to me and you say, Sean, I'm going to put $10,000 and I want to buy one rare coin and hold it for the next 20 years, that market is extremely sophisticated and in most cases, much more stable. So you also have to understand, depending on what end of the trade you're entering, whether you're entering on the sophisticated antique side of the trade or the speculative collectibles side, those markets have risks and rewards. Now, one good thing, if you go after reserve list Magic the Gathering cards, there's a lot of price movement in those cards, literally from month to month. So you could get involved in investing in a rare reserve list Magic the Gathering card. You may pay $1,000 for it. Well, 6 months later, it may be worth $1,500. But there's also the reverse end of the spectrum that's true as well. That card could also go down to $800 that you paid $1,000 for. So you really have to assess the risks of the market as well. But it is important to know your budget. That is paramount. The next thing you need to do, once you decide on the market or markets you want to enter, you have to start researching the market. Again, are you getting involved in a speculative market? Are you getting involved in an established market like the market for vintage sports cards or certain vintage comic books? Like I would say comic books that were produced before 1965 are pretty much established at this point. They're not mature, they're not sophisticated, they're not on par with rare coins, but it's still an established market. It's just like if you tell me, Sean, I'm going after 1950s or 1960s vintage sports cards. That market is established at present time. So that's really what you have to know if you're going to start to research this market. Each has risks and or rewards that you must be aware of. Now, this is where we get to developing a written plan. And this is a step that most people do not take when they get involved in these markets, and it's very important. After you determine your budget, after you research the market, and you collect or you determine what markets you want to go after in the antiques and collectibles market, your next step is to develop a written plan. Your written plan should include such details as total investment outlay, what items you are looking to buy and in what condition, and what price point you wish to achieve before selling. Now, the reason why this is very important that you write all that out, if you tell me, well, Sean, I'm going after this market and I want to build a collection of these 20 items. And I look over your list and I say, you know what? It's going to cost you $120,000 to get these 20 items in this condition at present time. Do you have the capital to spend $120,000 in this market? And you come back and you go, well, no, I'm a Timmy. I haven't paid off my school loans. I have credit card debt. My girlfriend's ready to leave me. And my mortgage was refinanced 4 times. Guess what? You're not going to have $120,000 to play in that market. So that's what a written plan should do. It should basically outlay what you want to do, what you want to achieve in these markets, and how you can best get there. So if you write all this out and you realize, well, gee, getting involved in this market is going to cost me over 6 figures, and you make $40,000 a year and pretty much have over $100,000 in debt, obviously you know that your plan is not realistic. Now, on the other end of the spectrum, if you start writing out the prices that you want to achieve for some of these items, and you realize you're paying a record price right now for this Pokemon card that you got to have, and you're only willing to sell that Pokemon card if it doubles in value in the next 6 months, that's a very unrealistic goal, guys. So that's why having a written plan is so important. It puts it on paper, and allows you to analyze it from the standpoint of, okay, if somebody realistically brought me this plan and I had to review it, would I approve this? Said another way, if I'm the CEO of this mini corporation that I'm setting up to invest in these antiques or collectibles, would I hire myself or would I fire myself? That's the question that you need to ask before you get involved in any of these markets. Now, after you do all that, you have your budget, you research the markets, you got your written plan, you need to determine if any of the markets that you're going after, if third-party grading exists. For instance, if you want to go after vintage sports cards, rare coins, currency, comic books, even if you're wanting to get involved in graded video games or Pokemon cards or Magic the Gathering, third-party grading exists in all of those markets. So I would encourage you, if you are getting involved in a market where third-party grading exists, take advantage of it. You want to get involved in handling third-party graded collectibles whenever you can. But you have to understand how population reports work for a lot of these collectibles. And you got to understand that if you are buying this stuff for investment potential, you need to be invested in the top 15% per grade, per condition of these items. Now, I know what my critics are going to say. Sean, population reports put out by CGC or PCGS or PSA or BGS are completely invalid. You don't understand. People play the crack out game. They crack out all these items thinking that they're going to send them in and get a higher grade. That is 100% true. I don't disagree with that. That is a true analysis. People do that. I do that. I've done that. I've played that game and profited from it highly, especially in comic books and in rare coins. But what I will tell you is the population reports are still 70 to 80% accurate. And in some cases, they're 90% accurate. Use them to your advantage. I used this example before. I'm going to state it again. If you are going after an Amazing Spider-Man 300, graded by CGC, in order for that particular book to qualify in investment grade condition, you must buy it in 9.8 condition or above. Now, do I think you should invest in that book for the short term or the long term? Absolutely not. There's too many out there. But a lot of you guys reach out to me and you go, Sean, it's the first appearance of Venom. I want to buy it. I don't care what you think. And what I tell you then is, okay, buy it at least in 9.8 condition. Why? Because there's tens of thousands of that book graded out there on the CGC census, and a lot of those books are already in 9.8 condition. So in order to get that book in investment grade, you're going to have to buy it in 9.8 condition. Not 9.6, not 9.4, 9.8 is the standard to own that book if you want to call it an investment grade collectible. Now, after you understand third-party grading, you need to research and understand pricing. To be fair, this is something I have not taught yet on this channel. We are going in this direction. We will eventually get there. But a lot of you guys reach out to me and you say, Sean, this collectible over here just sold for $6,000 at auction. Therefore, the market price for that particular item is $6,000. And what is it that I tell you guys? No, one sale does not a market make. I'm sorry. There's a lot of rare coins. There's a lot of rare banknotes that I bid on that sell through heritage auctions or even Stacks and Bowers at a premium where I can log on literally that instant on a dealer site and get that particular item for a lot less. There are people that overpay at auction on a regular basis. So just because something sells for a record-breaking price at auction does not mean it is the true market price. You guys are wrong in that assessment. And I know there's a lot of hype-driven YouTubers that tell you the opposite. I'm telling you, as an analyst in the trade who also knows economics, business, and finance, the market price is not always the auction price, and vice versa. Remember that lesson. There's going to be a whole video I'm going to be doing on that to show you guys that. That is a fallacy that a lot of people out there keep repeating in the antiques and collectibles trade, and it is not true. Just because an item sells for a set price at auction does not mean that is the market price at present time. What it means is, at that particular auction, when that auction ended and that item sold for, let's use this as an example, an item sells for $6,000, that's what somebody was willing to pay for that particular prices at that particular auction site at that particular time. It doesn't mean every item now is worth $6,000 that meets that criteria. So you must understand that. This is why research and understanding pricing is important. Now let me give you guys a tip. A lot of your top tier auction sites, whether we're talking Comic Link, whether we're talking Heritage, whether we're talking Hakes, whether we're talking Morphe's, they all allow you to sign up for a free account. And usually that account allows you to go back and look at previous items that sold or even past auction results. Use this to your advantage. Heritage Auctions keeps pricing data on their site for literally the past 10 years or more in certain instances. There are coins and pieces of currency that I can research through Heritage Auctions that were sold back in 2007, 2008, 2009. So all that price history, all that information is priceless in my opinion. If you can access it for free, which you can in this case, just sign up for a free account, that's really going to give you the edge you need to analyze these markets appropriately. Now, a caveat comes with this. There are certain auction houses out there where if an item sells for below a certain price, it will mysteriously drop off their previous sold listings. So there are auction companies, I hate to say this, that do manipulate the market a little bit by not advertising all the sold price items in a particular collecting category or that went off in a particular auction. So you do have to be careful in that regard. That's why it should only be used as a guide. Now, I have to state this. Even investment grade, third-party graded collectibles can and do fall in value at certain times, just like they also increase in value at certain times. The market at any given time is a crapshoot. I've said this before in other videos. Over the short term, the antiques and collectibles trade is somewhat predictable. Over the long term, though, it's almost like a casino. It's an inverse relationship with Wall Street. For instance, if you wanted to figure out what AT&T stock is going to do on the stock exchange tomorrow morning when the Dow opens, you would probably have a very hard time figuring out what AT&T stock is going to close at 4 p.m. Eastern Standard Time when the New York Stock Exchange closes. But if I told you over the next 30 years, do you think AT&T stock is going to go up in value on average or down in value on average? You would probably have a better shot at predicting that. So in regards to how we compare the antiques and collectibles trade with that of traditional asset investing, over the short term, the antiques and collectibles trade is more predictable than that of Wall Street. Now, over the long term, Wall Street is more predictable than that of the antiques and collectibles trade. It's very important to learn this, guys. I did a whole video on this particular topic. You also have to understand catalysts. Let me give you an example of a catalyst, and I've talked about this before in depth. Look at what the debut of the television show American Pickers did to the market for vintage advertising. If you want to research vintage advertising prices, there were Coke, Pepsi, Moxie Cola signs back before American Pickers debuted it on television that were selling at auction for $500 to $1,000 a piece. Are you aware, thanks to the massive speculative euphoria that show brought within bringing attention to the vintage advertising market, some of those signs that were only selling for $5,000 to $1,000 a piece back in 2009 are now selling for $5,000 to $10,000 a piece? That market is on fire at present time. It's the same thing if we look at CGC graded comic books. CGC caused a massive catalyst in vintage comic book collecting. So did the debut of a lot of these Marvel and DC television shows and movies. Well, those two catalysts combined, and today we're seeing comics like a Batman 1 in 9.4 condition sell for over $2.2 million. That's why, guys, you have to look at catalysts. Now, let's look at a catalyst in reverse. If I would get in a DeLorean time machine with you guys, take you back to the 1980s, and allow you to talk to a lot of auctioneers or a lot of collectors in the trade, a lot of these guys would tell you, yeah, it's all about Western collectibles, baby. Lone Ranger, Gunsmoke, Bonanza, Butch Cassidy and the Sundance Kid, all these toys and properties that were produced in the 1950s and 40s and 60s that a lot of these old timers were collecting back then, they thought that was going to be the future. Well, we now know, if you look back on the antiques and collectibles trade, those particular items hit their peak in the 1990s and the early 2000s. Today, there's very few young collectors that are going after Gunsmoke lunchboxes or Marx action play sets that are based on Western themes and the like. Those particular items are starting to descend in value. There isn't much of a collecting base for most of those items at present time. That's an example of a reverse catalyst in the trade. A lot of people in the 1980s were more looking ahead at Star Wars, superheroes, and the like that are popular today. Well, we don't know what the next big catalyst is going to be. That's why you got to be cautious and be aware that these markets can change on a dime. Now let's go to step 6. Tip 6 is understand the maintenance, storage, and insurance risks of the items you collect. You know, some of you guys out there, you want to own $1 million plus comic book while making $40,000 a year. Well, I'm going to tell you this firsthand. You're not going to be able to afford to insure $1 million book on $40,000 a year. Now, I'm not saying your insurance costs are going to be $40,000 or greater. On a book like that, though, you're probably going to spend $3,000 to $5,000 a year, believe it or not, just to insure a book like that for any of the top companies that will allow you to write an insurance policy of that size for that caliber book. Now, there are exceptions. If you agree to store the book in a safety deposit box, if you agree to use vault storage, you're going to get a discount on the insurance of that particular item that could literally take it down to $800, $900 a year on average, which is very affordable for almost anybody out there. But my point is, if you are going to buy a particular top-tier collectible, you must understand that it should be in coordinates to your whole net worth or your yearly earnings. You do not want to make $70,000 a year and have your whole net worth tied up in 3 items that cost $100,000 a piece. That is not smart investing overall, and it sure as hell is not going to be rewarded in the antiques and collectibles trade, because if something happens to one of those items, they either go down in value or one gets stolen or lost or damaged, it's going to infect your entire net worth. You have to be smart about investing in these markets. The last step is very vital. Learn to take profits if the collectibles can easily be purchased and found in the marketplace again. What do I mean by that? Well, let's say that you have a box, a Pokemon booster box of Evolutions. Evolutions, at the filming of this video, is now selling for $1,000 a box. Well, I got news for you guys. It's not a rare or uncommon Pokemon set or a booster box by any means. Anybody who has $1,000 can go to the market and you can find a buyer for an Evolutions booster box at present time. Well, guess what that means? If you have a case of those particular items, now's a good time to sell into the market. Now, if you're worried, well, Sean, what if I'm never ever going to find an Evolutions booster box for sale again on eBay or any of the sites that I belong to that deal in these particular items? I got news for you. Don't worry. There's a ton of them out there. So if you only paid $90 or $100 for a box of Evolutions and now it's selling for $1,000, obviously smart money would be to sell that particular item and take the profit and run. However, if you are on the other side of the spectrum, where you are going after certain rare coins, certain very expensive and rare firearms, traditional antiques, pieces of artwork where there's only one of a kind, and an item like that doubles or triples in value, you really have to analyze the market and your emotional attachment to that item, and you have to ask yourself, hey, do I want to sell this rare painting for $40,000 even though I only paid $20,000 for it, knowing that I may not get it again? And that's a harder question to answer than somebody who is invested in mass-produced collectibles. So I hope that helps. So guys, the crux of this video was just to get you thinking in this direction as to what's involved in investing in antiques and collectibles. Some of you out there, I can tell firsthand just by interacting with you, either you're on one end of the spectrum or the other. Either you already know this or these thoughts never entered your mind. And if you are trying to invest either short-term, mid-term, or long-term in these markets, this is stuff you have to understand. You must understand the dynamics and the fundamentals as to how these markets operate and how to invest in them, either short-term, mid-term, or long-term. Thank you for watching. Please let me know your feedback if you do watch this whole entire video. Thank you. And if my content interests you, please consider subscribing. Have a good night.